Everyone's panicking about the market crash. The US is drowning in national debt while inflation finally cools down. But here's what nobody's talking about. The Fed has no choice but to slash interest rates soon. When that happens, certain assets will explode in value. I'm JD Ramos. Welcome back to the JD Ramos Show. The global markets are crashing hard right now. Trump's new tariffs and government cuts are shaking things up. The 4-year crypto cycle is no more than an illusion at this point. But the craziest part, this could set us up for one of the biggest wealth transfers in history. As the dollar plummets, crypto and stocks might be creating millionaires overnight. Market crashes fascinate us because they threaten what we value most, our financial security. They're like economic earthquakes that nobody can fully predict. Every time markets stumble, experts rush to explain why this time is different. But behind today's volatility lies a perfect storm: massive national debt, aggressive tariffs, and sudden government spending cuts. Some analysts see this as the beginning of something bigger. Not just a correction, but a complete reset of our financial system. Think about it. The national debt has ballooned to over $30 trillion. That's over $90,000 for every American. And now, with the slash government programs, many communities are feeling immediate pain. Wait, but how could a crashing market possibly be good news, and why is this happening? The first reason markets are crashing involves the tariff policies implemented by President Trump. These tariffs might increase costs for businesses and create uncertainty in international markets. Investors dislike uncertainty, causing them to withdraw from equities, which drives down stock and crypto prices. As I mentioned before, another critical factor is the soaring US national debt, now reaching unprecedented levels. Some of that debt is due to be matured by the latest June of this year. But with high interest rates, refinancing this massive debt is increasingly expensive. But if the Fed cuts interest rates in response to slowing economic conditions, refinancing this debt at lower rates could relieve some of the financial pressure. But how can the Fed know that the economy is slowing down? I already talked about some of them. An increase in unemployment numbers. Remember those cuts in federal programs? More people without jobs mean fewer people spending money they don't have. Other important factors like decreased oil prices mean lower inflation, for many reasons, including the possible of the end of the war between Russia and Ukraine. Oil prices have been decreasing. Typically, cheaper oil can be a positive sign for consumers because the effect of lower prices is massive. But lower demand for oil typically indicates reduced industrial activity and global trade. This indicates a slowing economic growth. Investors interpret these signs as signals of potential recession, further pulling money out of riskier investments. Also, we're seeing a significant weakening in the US dollar. A weakened dollar means the perceived risk of investing in dollar-denominated assets rises, while some investors might shift to tangible assets or foreign investments. Many sell off stocks, bonds, and other dollar-based assets, intensifying the market downturn. So who's going to save us from all this? One of the main objectives of President Trump is to lower interest rates, which Jerome Powell has responded with a strong no. It's not going to happen. But given these troubling indicators, the Fed is expected to respond by lowering interest rates. Lower rates aim to encourage borrowing, investment, and consumer spending, stimulating economic growth. The Fed, taking these measures, can ignite a flow in liquidity into the market. But first, we'll have to clean house to get things in order. Remember, money doesn't vanish during crashes. It just moves from one pocket to another. Of course, this creates wild swings that can either make you rich or wipe your savings. The wealth gap widens in these moments as those with knowledge position themselves differently than the average person. So what's the real plan behind all this chaos? Cutting government spending hurts in the short term. Benefits get slashed and people lose jobs. But supporters argue it's like economic medicine, painful but necessary to restore long-term health. The question isn't just whether you'll survive this market turmoil, but whether you'll position yourself to benefit from it. But first, if you want to keep ahead and informed, like this video and subscribe to the channel for ongoing analysis and insights. For deeper discussions and timely updates, join our newsletter link below. In the meantime, take care. God bless. This was JD Ramos, and I'll see you in the next one.